The fact that we're seeing cash, as it always does, chase yield, making its way into cryptocurrency, like you can't even believe, but we haven't seen anything there. What is that doing to the price of gold and silver? Honestly, unfortunately, it's under pressure. But this is a perspective. It gives us all an opportunity to acquire these things. And there's a lot of people that are very unhappy with what they're seeing. I know about the people that follow your work, but people, to me, they're like, "Oh, Greg, what's going on?" But look, man, I don't think about gold or silver in terms of where it's going to go tomorrow, the next day, the next week, 6 months from now. I really don't. What I understand, and I think what most people need to understand, is it's the best hedge on the face of the earth for what is going to happen, and that is an implosion of this debt market on a massive scale, where cash is just going to make its way into suppressed assets, and I believe it's still going to go into cryptocurrencies as well.
In a captivating exploration of today's financial landscape, financial strategist Gregory Mannarino shares insightful perspectives on the interplay between precious metals and the rapidly evolving world of cryptocurrencies. As more people turn to cryptocurrencies, we see an intriguing downward pressure on traditional safe haven assets like gold and silver. This dynamic presents a unique opportunity for investors looking to capitalize on lower prices. For instance, gold exhibits remarkable resilience as it nears a 3-month high, hovering around $2,760. Traders are keeping a close eye on key developments such as U.S. trade policies and S&P Global's preliminary PMI data, which are vital indicators of the economic climate. Silver, currently trading around $30.60, is navigating challenges posed by a potentially strengthening dollar and anticipated Federal Reserve policy adjustments. Mannarino urges investors to adopt a long-term perspective and to remain calm in the face of short-term price fluctuations. He views gold and silver as essential hedges against unpredictable market disruptions, particularly in the event of a possible debt market collapse. Such a scenario could shift funds towards currently undervalued assets, including cryptocurrencies, adding even more excitement to this evolving market. The strategist notes that current stock market valuations seem disproportionate, and as cash flows into cryptocurrencies, investors can buy gold and silver at better prices. Historically, gold retains its value well, often inversely related to inflation, while silver has shown resilience during economic downturns. Today's market is an intriguing mix of traditional safe haven assets and emerging digital currencies, requiring a thoughtful approach for successful navigation. Before we embark on this insightful journey, subscribe to our channel, tap the bell icon to stay updated on all our exciting content, and share this video with friends or anyone else who could benefit from our discussions.
What I've been telling people for a freaking decade, that is massive currency devaluation. It's going to get a lot worse. It's going to accelerate here in the United States and unfortunately around the world. The central banks running the show. They're not done. Period. The end. And people need to continue to do what we've been doing for years now, betting against the system that's going to be inflated beyond anyone's wildest dreams. It already is. I mean, this has gone on way. The valuations in the stock market make absolutely no sense. The fact that we're seeing cash, as it always does, chase yield, making its way into cryptocurrency, like you can't even believe, but we haven't seen anything there. What is that doing to the price of gold and silver? Honestly, unfortunately, it's under pressure. But this is a perspective. It gives us all an opportunity to acquire these things. And there's a lot of people that are very unhappy with what they're seeing. I know about the people that follow your work, but people, to me, they're like, "Oh, Greg, what's going on?" But look, man, I don't think about gold or silver in terms of where it's going to go tomorrow, the next day, the next week, 6 months from now. I really don't. What I understand, and I think what most people need to understand, is it's the best hedge on the face of the earth for what is going to happen, and that is an implosion of this debt market on a massive scale, where cash is just going to make its way into suppressed assets, and I believe it's still going to go into cryptocurrencies as well. So we're going to continue doing what we're doing. The economy's coming apart. People, it's not going to change just because we've got a figurehead change here behind the Resolute desk at all whatsoever, because again, it's the currency that we need to be looking at, and it's being wiped out. We're being thrust into being the crypto capital of the world, not the constitutional money capital of the world. And people seem to be, singing on the deck of the Titanic, and not holding anyone to account. Their elected officials, like they never do. And this new guy, everyone thinks he walks on water. You got to be freaking kidding me, man. But that's the situation of where we're at. Look, man, it's unfortunately, look, you and me, and there's other people too, have been working so diligently for so long, trying to let people understand, and they can't see it. They don't know what's happening to them. They've been lulled into some kind of a freak show, right? But we're going to continue what we're doing, man, because it's not going to change. People need to understand that we're being deliberately destroyed the middle class of the world, as I've been saying forever. It seems like that is an extinction level event. And I think people like you and me, and there's a lot of the guys and girls out there trying to do the same thing, trying to get people to understand that they got to be ready for this, because it can happen at any moment. The system is a liquid. They're going to pump it with more debt just in an attempt to keep it up, the appearance of the system functioning. But we have a problem in the debt market. Up until just a couple of weeks ago, the debt market was in a lot of trouble. I came out telling people, I said, if they don't jump in here immediately, central banks start buying the debt, it was over. What happened? The week after I said that, bam, global bond yields started to drop. Here in the 10-year yield in the United States has been cratering, and the market has gone back up. I mean, I don't know what people need to see to understand that this is how the system actually functions, and they better start doing something about it. Otherwise, they were going to end up on the losing side of this. And, is it going to work is the real question. Are they going to be able to keep the system pumped up? It's going to take a lot of debt buying. Well, first of all, the central banks have to create cash out of nothing, currency, and then buy the debt with it to keep the system, the appearance of it functioning, going. Is it going to be enough to do that? Maybe, but at one point it's going to end, but not at a point of our choosing. I think sincerely, It's going to be when they collectively decide. For example, going back to recently when I said if central banks don't act to start pumping the debt market collectively, we were in trouble. And simultaneously, we watched it overnight happen. That's what they're going to do too. It's a coordinated effort with world leaders to bring down the system to allow the new one to be implemented. And it's unfortunate, but that's where we're going. And people are going to suffer. People are going to suffer all over the world. How they're going to get people to obviously accept it is by presenting them with the same scenario. Problem. We have a problem, everyone.
Right.
Wait for the public reaction, and then here's the solution. Of course, it's a solution in their favor. It's always the same. And that's what they're setting up right now by hyperinflating this debt monster that they're involved in here on a global scale.
As the banking industry gears up to embrace digital currency, Bank of America is leading the charge, preparing for crypto payments as soon as regulations allow. CEO Brian Moynihan proudly shared that the bank is at the forefront of this technological wave, supported by hundreds of blockchain patents. Mannarino describes this evolution as a bridge phase to transition financial systems. This involves devaluing traditional currency while promoting cryptocurrency as a payment alternative. Banks facilitate this shift by investing spare transaction change into Bitcoin, encouraging consumer participation. The implications of this transition are far-reaching. Cryptocurrencies stand to fundamentally reshape monetary policies, particularly for smaller nations, by potentially altering the control these banks have over the money supply. This marks a significant shift in the global financial governance landscape. While we can't ignore the inherent volatility in the cryptocurrency market, evident from the fluctuations seen in 2022 and the challenges faced by various crypto firms, there's a growing sense of commitment within the banking sector to embrace digital currency. This convergence between traditional banks and cryptocurrency platforms signals a transformative recalibration of the global financial landscape, positioning digital currencies at the forefront of our future investment and transaction strategies. Let's get back to the interview.
As a matter of fact, it was yesterday that Brian Moynihan from Bank of America actually came out and says they're just waiting for the word go to start getting people used to transacting in crypto. That's the first step. Some institutions right now are actually, I forget what the program is actually called, like a spare change. What they're doing, for example, let's say you go to your bank and you deposit a $100 check, like $100.59. They're going to start offering you, hey, do you want to use that 59 cents to invest in Bitcoin? Everyone knows Bitcoin because it's the mommy. You mentioned something else that said Cardano. They don't know what it is, or Dogecoin, whatever. They don't know, but they know Bitcoin. So people, that's how they're going to do it. They got to ease people into feeling comfortable with it. It's not going to be an easy task, honestly. But this is where we're going to go. They're going to mainstream crypto. That's why, again, right, all the way up before Trump was promising to make us the crypto capital of the world, he knew the deal here. This was all being set up before he was so-called elected, for which he was not, in my view. It's a selection here. And, Trump was selected for that reason, to allow the system to be bridged into what is coming. And this is just a bridge. We're going into full tokenization where everything is going to be reduced to a token. a one world system here. That's what they're really working towards. It. They already have the system, but they got to bridge us first. Will people accept it? Some people are not going to, no doubt about it. But they're going to get the masses to accept it. Now they got to create more dependency on the current system, which they've been doing for a very, very long time. They
Right.
got to pressure the consumer, and the consumer is going to be pressured further by the currency being devalued. By people are going to be looking at Bitcoin now at 105, 107,000, whatever it is, and it's going to be going to 120, 130. They're going, what am I doing? Why am I not investing in this stuff? I mean, I can't believe people aren't already. I mean, I came out when Bitcoin was 17,500. Of course, I was ridiculed and everything. I said, people, stop buying this stuff. And you know, actually, it was interesting. I rode Bitcoin quite a while up and down. Bought it a lot cheaper than that. The even was around $6,000. Got out at around 30. This is years ago. I told people, get out at 30, and of course, and I got called out for that. Then we cratered. Then we went back up at 17.5. I said bye, and I'm still getting told by people, and you probably are too. I don't know if you talk about this stuff too much, but oh, you're wrong. You're leading people astray. It looks like
Oh
I
yeah,
hadn't
absolutely.
done that. People don't. BlackRock today, actually last week, BlackRock came out saying they're all in on crypto now. Then you got Trump with his task force and the SEC doing their deregulation with crypto. And this is the part of that system that must be the key here, is the merging of crypto and the banking system, again, to get people used to it. And that's happening very fast. So once they finish that bridge, we're going to see more people accepting it. They got to get people lulled into that.
Gold, in particular, remains the ultimate hedge against economic uncertainty. With digital currencies gaining traction and markets becoming increasingly volatile, the timeless value of gold provides unmatched security during uncertain times. In a world where global currencies are losing value, gold's role as a dependable store of wealth becomes essential for ensuring financial security. What do you think lies ahead for gold in a world embracing cryptocurrencies and digital assets? Share your thoughts in the comments below. Let's ignite the conversation. If you found this video enjoyable, please don't forget to hit that like button and subscribe to our channel for more engaging content. Thank you for tuning in.